Hey, what's up, guys, and welcome to my webinar. I'm going to be making a 10-part series on what I believe is the most important things to get you from not knowing anything about the stock market to getting you to be able to be comfortable in trading with small size and actually start to build yourself to financial freedom. And in this series, my niche is trading small cap stocks. And one of the best way, in my opinion, to make money trading small cap stocks is to short sell the stock. And so I want to go through a beginner series to get you guys from, like I said, point A to point Z and feel confident that you guys can actually be able to trade. And whether or not you guys work with me down the road or whatever, it really doesn't matter. For me, I feel like there isn't very much honest and good knowledge out there, and so I want to do my part. And I don't know, I really believe that if you put good energy out there, good energy comes back. And so for me, I want to help as many people out as I possibly can. And so we're going to dive straight into short selling for beginners, mastering the art of shorting. Welcome to our insightful webinar on short selling, specifically designed for beginners interested in the world of small caps trading. Today we'll explore the fundamentals of short selling, equip you with the knowledge and tools to navigate this exciting and potentially rewarding area of the market. So the fundamentals of short selling. Understanding short selling. What is short selling? When I first started trading stocks, I thought the only way that you can make money trading is if the stock goes up. And really, that was like one of the most mind-blowing things in my journey was, wait, I can make money when the stock goes down. That's what short selling is. Short selling is the act of borrowing an asset, selling it in the market, and then buying it back at a lower price to return to the lender, profiting from the price difference. So exactly what I just said. When it goes up, I sell first. I believe that this stock, for whatever reason, is overpriced and does not need to be trading at this level. And I take this trade, I sell it first, and then when it goes down and I buy it back, I make that difference. At the same time, the risk of short selling, there's really unlimited loss potential, because if you get super greedy and super stubborn, really, I mean, it's very, very, very unlikely that this stock is going to go to the moon. But here in a second, I'll show you. There is times where this stock could just absolutely, I mean, you could lose your house, you could lose literally everything. That comes from short squeeze risk. What a short squeeze is when people are, well, too stubborn, and they don't have any rules at all. Their ego is too big to admit that they're wrong, and it allows for the stock to go higher. Well, once you cover your position, you're essentially buying back. Well, if I sell first and the stock goes against me, then when I cover, I am buying back, which then fuels the stock to go even higher. And one of the biggest examples that I can think of is GameStop. This thing went from $2.50, 57 cents to be exact, right? It was during COVID. These big hedge funds thought that this stock was just dead. Everybody's going to buying video games digitally, and GameStop, they thought that it was a very good chance that this thing could be a very potential moneymaker for the hedge funds. And they really underestimated the power of Reddit and retail traders, and these really, it kind of made for at least a few years, like these pumpers that would come in and be like, oh dude, this stock's gonna go to the moon, it's gonna keep going higher. Well, it starts popping up, and it's like, oh damn dude, that it got to $6. Well, then what happens? Then the media starts getting in on the story, like, oh dang dude, like this is a hot story, like let's talk about this instead of COVID. Next you start having an accumulation phase, and all of a sudden a higher low, a higher low, a higher low, a higher low, higher low, higher low, and then all of a sudden, boom. This, I would imagine that a big hedge fund covered their position for a relatively big loss, and which really spiked this thing up. The second that that happens, it's like every single person in the world is now got their eyes on GameStop, and then that's where the game begins. And it's like, okay, well, somebody, that was ready to potentially make a ton of money, start stepping in, and then that's when you start seeing this kind of stuff where this thing can go up to $1.50 and then have a low at like $60, and then the next day it gaps up, to $80 and goes back up to, like, this is some crazy range, and a lot of people lost a lot of money and got hurt and lost their savings account. But then people that have a lot of money and can have bigger risk and move the stocks, those guys, they made bank on this. And that's one of the potential risks of short selling, because the hedge funds lost a lot of money. Yeah, that sucks for them. But can you imagine if you were just a regular retail trader? You get short at $6. You're like, nah, dude, this thing's going to go to zero, because for whatever reason, that's one thing that beginner traders always think, that these things are going to go to zero. If it goes to zero, that company went bankrupt. Like, if every single company went to zero, there wouldn't be a stock market. So it's not going to go back down to zero. And if you don't pay attention to price action and patterns, and put knowledge into things, you just start gambling, you can really get hurt. And this is probably one of the best examples of a short squeeze I can possibly think of. Oops. So the technical analysis, price action, really for me is king, because really, if you don't understand price action, you don't understand the patterns, how the volume ties in, everything. For me, if you look at a chart it's just a motion. Really, that's the way I look at it. It's a motion, and being able to identify where people are. It goes back to Warren Buffett. He starts talking about, you want to sell into people's greed and buy into people's fear. It's exactly the same thing in small caps. It's just you do it, well, in reverse. Like, I want to see the price action. I want to see things go into my level, and I want the stock to come to me. If I show up and I have an idea, I'm going to short this stock at $4 or $4.15, because there's a daily level there. That stock has to hit $4.15 or I don't trade it, because the stock has to come to you. You have to have a plan. You have to have your entry, your risk, and your targets. If you don't have all those three things, you're gambling, and you're never going to make any significant amounts of money in the stock market ever. Don't care what anybody tells you. It's just not going to happen. But you can start learning how to do that kind of stuff with price action. And when you start identifying the patterns, you can start seeing, like, for instance, on this chart over here, I have no idea what this line, this EMA is. But when you start seeing this thing popping up, it kind of makes a curl, higher high, higher low, higher high, higher low, higher high. This is a stuff candle. So, like, for me, being a small cap trader, I would imagine this is not a small cap stock, but for me, this would be a indication where I would take a trade here. This is what I'm looking for, and the kind of price action I'm looking for to get into a trade. But when I see this thing holding and it's got a higher low, I don't like that. I want this to break through this low. How I explain it to my traders is, you want to think of the stock market like the ceilings and the floors. I want to trade as a short seller, at least. I want to trade as close as I possibly can to the ceiling because that reduces my risk. I then want to cover as close as I can to the floor. I'm a position trader. I'm not a scalper, and I'll get into that in later webinars. But that's how you use price action. But the second you start seeing this, it looks like a double bottom right here, and it starts going up. Say I was in, right at the top. I'm not going to let this go against me and I lose. It's simple for me now. It took me years to understand the importance of having rules and following those rules. And the biggest thing, really, the biggest indicator for me is volume. You can use all sorts of stuff. There's, book map, there's footprint, there's different EMAs, Fibonacci. There's a million different ways that people can find a reason to get into a trade. But for me, the biggest thing is volume because volume is demand. And the higher the volume, that especially that determines, how strong the stock's going to move. There's obviously there's potential things for for reversal, like high volume during the breakout suggests that gives me very strong conviction, like, oh, this stock might just tank. Somebody, a big hand, just unloaded all of their shares on retail traders that have no idea what they're doing. They bought a breakout and they think that the stock's going to go to the moon, and they just made some institutional, company a lot of money. And I'm not a huge fan of that. But anyways, technical indicators. For me personally, the only thing that I use indicators for is for targets. I don't really care if the 5 and the 15 or whatever. I really don't care because there's a million different ways that you can look at a stock. And really, I truly believe this. It only takes one person to ruin your trade, because especially with trading small cap stocks. For me, $1 million is a lot of money. There might be some rich guy, his family, owns an oil company or something like that, and he's bored for the day, and the guy's like, oh, hey, look at this, $2 stock that has 3 million float. That means that for $6 million, you can essentially buy everything. And for him, he's like, I want to make a little bit of money, or I'm bored today, and he could absolutely come in and start manipulating the stock, especially if he has a little bit of knowledge in the stock market. And so you have to start understanding the game of trading. All these things piece together into a thing. You can't just have mastery of price action but then don't care about volume, or have great indicators and not care about the other two. It all pieces together into something that allows you to play, in my opinion, the most potentially the best game in the world. So these are a couple of different examples that I'm going to go over. So these are old trades. So for me, how I trade, and this is going to be kind of a little giveaway, but I don't really care. This to me is a gap and crap. This golden area is a level that I look for. And what I want this thing to come up and start rejecting. And I made a video on this a while ago, so you guys can go back and watch it. But I need this thing to reject. Then I go short. Like I said, I sell first, because for me, 95% of small caps are going to gap up, and they're going to give back most of their gap in the same day. Most of these things are BS companies that are never going to amount to anything, and really all they do is they sell off shares, or they do offerings. They give JP Morgan or Wainwright or whoever they want to work with that day, hey man, for $1 million, I'll give you 500,000 shares, or usually it's millions of shares, but it really doesn't matter. But what they're doing is they spike this thing up, and then JP Morgan or Wainwright, they're like, well, hey, I have to make them my money. So if they get say 1 million shares down here at a dollar 40, like, well, hey, I got to make a profit. Yeah, I'll invest in your company, but they don't want to hold this company. Like I said, most of these companies are complete BS companies. They're not something that you invest in. You just trade them, and institutions understand that. They understand the game of small caps. Well, they gap it up. This thing hit, almost 250, 240s, and then goes back down to 160. I like that because for me, that shows that this thing clearly has a ceiling and it has a floor. Like I said, what I like to do is I want to trade as close to the ceiling as possible, because the way I personally do it is I risk just over the ceiling level. So for me, whatever your shares are or whatever your dollar amount that you're willing to risk, you get in here risking this. Okay, it goes down. This is the only thing I use EMAs for. I couldn't care less what these things are doing or whatever. Yeah, like some of the things will let me realize, oh, hey, this is really it's gonna go down a lot more, and it'll make me feel comfortable to hold my position. But really, for me, I just use it for targets. It's the easiest thing ever. And how my system works is once I cover or I make some money, I don't risk anything. So this goes back up, I cover. Okay, I made whatever amount of money this made. Good deal, dude. Pops up. Okay, well, hey, here's my second chance to trade. Play number 2. I take it here, I cover again. All right, well, it curls and it goes back up. I will. Right now, this is telling me that it's playing games. Why? Because, like I said, most of these stocks go down, but it's all about timing. Just because 95% of the stocks go down does not mean that it's going to go down right at the beginning. It doesn't just shoot up and then shoot down. These guys are trying to make money too. And if they can make money and sell a big position, it goes down, they buy it back. Okay, they sell another big position, they buy it back. They sell another big position, they buy it back. They sell another big position, they buy it back again, and then they really sell a big position. And how you can start seeing this is down here. The volume. The volume, oopsies. The volume tells you everything that you need to know. So, if you look at the first trade, right? This thing's trading like 2 million shares. All right, well, that means that somebody just unloaded a bunch of shares. It made the stock market, it's made it move. And that's how you know where a big hand is. I'm not going to make this thing move. I don't trade with enough share size, but these guys are going to make it move. Well, it goes down, and then look at small volume, right? It pops back up, lower volume, but then starts squeezing people out, and then they sell it again. Look at this volume. It's even higher. Okay, well, that could be a potential problem. For me, I get in here, but I have to be very, very mindful because I'm like, well, this thing is pumping out more shares. I don't know. Yeah, I know that there's a big company that is selling their shares right here, but how much of this volume is actual buyers' demand? Because for me, those guys run out of their supply, but there's more demand, like COVID, for instance, when there's everyone sitting around in their house and there's a ungodly amount of demand because everybody got their government checks and they have all this money that they can spend. Those guys made a lot of money because they sold all their supply, but demand was still more, and so the stocks just keep going higher. You have to be very mindful of that. And so for me, you have to be very, very cautious, and depending on your style and your experience, this might make you change how much size you go in or how much money you're willing to risk on this trade. Then it goes down. Like I said, I cover half, and then it goes back up, and all right, I lost out on the other piece. Why? Because higher low, higher high, higher low, higher high, higher low, oh, lower high. All right, it goes back down. But then if you look at this at a bigger time frame, this has still got a higher low. I want this to break, because if this doesn't break and this has it finds a higher floor, it could potentially push it back up. And the problem is there's a lot of people that started learning how to short sell stocks, and so they just start diving in, or they start chasing it. They don't have enough experience to know, hey, dude, you either have the experience to capitalize on the trade when it's in the zone that you should be in, or you just leave it. And when you have a lot of short sellers that don't know what they're doing, it can make a lot of choppiness, which is kind of where I feel like the stock market is today. There's a lot of beginner shorts, there's a lot of beginner longs, and it allows for some really crazy price action. But, this for me is like, all right, I'm going to leave this alone, because, yeah, there's levels that it can possibly go to, but for me, I don't like to overstay my welcome. And for me, yeah, I only covered, whatever I cover here. But for me, all I need in my day is to make sure that I get this to there. That's it. That's all I need. And I'm like, okay, cool. For me, I explain to people that watch American baseball, this is my base hit. That's all I need. I don't need this thing to fade all the way down there. If it does, awesome. I had a great day. If it doesn't, and I only get to here, cool, man. But you have to really start identifying. But for me, when this thing squeezes up, this is starting to get really trappy. You got to start looking at the time of day, all that kind of stuff. But, this thing pops up, just shy of $3. For me, I wouldn't get in here. Why? Because it's just under $3. Unless there's a daily level, I don't care. This thing finds a bottom, has a doji candle right here. Looks like consolidation. Consolidation means one of two things. For me, it's a buildup of pressure, and it's either going to shoot up or shoot down. Do you want to risk your hard-earned money on trading in here? That's cool. For me personally, I don't do that stuff. But when this thing shoots up here like this, and then it has much lower volume, goes higher, somebody just sold the hell out of this thing. This thing comes down, I am absolutely, if I was here, I don't remember this day or what, but if I was around, I would have got in right here, full size, risking over there, and I would just held this thing all day long. That's what you learn when you get experience. But here's another example. So put the volume on here too. So this green line, you guys don't know any of this stuff, but this is a daily level for me. So for me, this is still a valid play for me to trade here. I took a loss. I lost, whatever amount of money my 1R. That's why I teach my students is you have to have an idea of each trade you should be risking 1R. Whether that's $50, that's $100, or that's, $500 or $1,000, whatever your 1R is. And you need to calculate how much you're willing to risk on each trade. And so for me, I have the high up here. I covered my position. Okay, well, I lost whatever my 1R is. All right, I'm down 1R on the day. Well, this thing pops up and stuffs, which is what a stuff is when something pops up. I explain it like back when I was a kid, we used to dunk our friends in the swimming pool. You'd swim behind your friend, you jump up, grab him by the top of the head, and slam him under the water. That's what a stuff is. It's a really fast price action. And so when this thing slams under, I'm in right here. Well, this thing popped up to 372. I'm in at like 365-ish. So I'm risking 7 cents. I'm in with a lot more size than I was over here. Why? Because I have to calculate in what I'm risking. Over here, I'm risking, well, I guess not a lot more size. I'm probably in, yeah, I mean, this is like 15 cents, this is 7 cents, so I'm in twice as much size. Okay, cool, whatever. If you're in, like I said, I only care about the EMAs for targets. Cover, 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 final cover down here. When you start seeing the price action, though, look at the volume on this first candle. That's a lot of demand, and so for me, it's like, well, the thing slams down, but then it shoots right back up on lower volume. I respected my trade. My trade was, I take this entry, my risk is here, my stop is there. That's it. It either works or it doesn't work. There's no C or D or E option. There's one or two, A or B. That's it. I took the stop. Okay, well, the volume is going much lower now. This thing pops into a day level, slams down. I'm like, all right, well, that's another valid trade for me. So for me, I take the trade. I'm risking just over here. Volume's going down. Well, once this thing starts tanking, look at the volume. It's dead. There is absolutely no reason to get out. But when I was a beginner, I would, get out here, get out there, because you start looking at, the money that you're making, and you're trading the money, not the process. And that's another huge mistake that beginners make, which is something that you need to start analyzing. Let's see. Oops. Why is this not working? One second. Technical difficulty. Alright. There we go. Sorry about that. So, I also want to talk about bullish patterns, which means that it is indicating that you should be buying the stock, or if you're short like me, that you should be looking to get out of your position or start trailing your stop, which I'll explain in later webinars. But bullish pattern suggests that the price of the asset is likely to go higher. Bearish means that the patterns are indicating that the price is found its ceiling or its topping and it's going to go down. I'm looking for bearish patterns because 99% of the time I trade bearish patterns, and those are inverse head and shoulders, which I don't have a lot of examples on. I might be able to find one here, but I don't really look for bearish patterns. Double bottoms means that it finds a floor, and on a 1 minute candle it finds a bottom, the second candle finds another bottom, that's two bottoms, and it goes up. Or a fake breakdown where you have your floor and the stock goes through the floor and then right back up. It's an inverse fake breakout. And so for me, this is a huge no-no. This is like something that a lot of beginners do. For me, this gray dotted line down here, this is the final target. If you miss this trade, okay, you missed the trade, but if I see this thing, that close within 10 cents of the final target, and then it starts making higher lows, this thing's about to play games. The only way that I teach that you should be looking for this thing is right here. This is really the only place that I feel comfortable trading at. And you would have taken a loss if you would have traded this. But if it goes over and then starts chopping around, it has a fake breakout. This would have been a nice trade. That's the thing. It's all about timing, and I don't know, finding your patterns or whatever that shows you that you have an edge in the stock market. You need to start trading. But when this thing starts curling like this, man, it's just curling, and then it finds a topping, below $4. I don't know if there was a daily level there or not, but you want to start watching for this kind of stuff. Like these little, where it finds a topping, it goes down, and it literally looks like a cup, a bigger cup. Like I don't want to see that stuff. I want to see something that's nice and easy. goes up, finds the top, and then just falls down. I don't want to see this chop. And for me, in my personal opinion, the reason that there is chop like this is because there's a lot of beginner shorts that have no idea what the hell they're doing. They're taught, like, once they start learning how to trade short, oh, these things pop up and then they all just fail. They just get in and hold. No, dude, that, like, yeah, most of them do fail. If you look at this thing, at the end of the day, it was back down at 250. It went up to 390, 391, down to 250. Yeah, okay, it gave back, a lot. I don't know what this gapped up from. This other example, this thing is up from $1.10. If you look at it, yeah, I mean, it didn't give all of it back, but it got pretty dang close and is up at $2.12. That's almost $1 difference. You can make a lot of money off of $1 difference. The difference is you need to have experience of, how to trade, how to understand the price action, how to understand the volume. I mean, for me, this would be a hard one to kind of pick at because, it's a lower price stock, so obviously it's going to have more volume. But, you have, levels. Like for me, trade here. You should have covered down here. I don't know how old this trade is, but 2020. So yeah, like I'm still a beginner at this stage. I didn't cover here. I should have. I covered break even. Okay, cool, man. It pops back up. I took another shot. Didn't happen again. Well, look at this. Low, higher low, higher low, higher low, higher low. Okay, dude, this thing is about to rip, and it comes up. I took a trade right here, but if you look at that's not a good. My trading has evolved a lot since then. I would have literally been risking just over this, and then taking another trade up here because this is a valid trade. But once again, I would have covered some at my first target. Then my second target. Okay, look at it. It's just playing games, man, and you have to start understanding the patterns that these things go through, and because they literally rinse and repeat over and over and over. And so let's see, having technical difficulties, my bad, guys. What is going on? So, bearish patterns. Like I said, this is more of my bread and butter. And if you can see, this is completely different than the other one, right? This thing pops up. Once again, you guys see the green level. That means a daily level for me, right? Okay, I took the trade. I'm risking just over the high, and it just tanks. And for me, that's the gold thing. And after it starts tanking, there's nothing. There's nobody that's on the other side of the trade going like, oh, I think this might be a really good buy. Maybe I should buy and hold this. I'm gonna throw $1,000 on this trade. There's nobody is buying this stock at all. And so for me, it's like there's no reason to get out of this trade. I have no idea why I don't have a cover over here, but I guess because this is relatively close to my final target. Okay, so I covered, but still, I mean, you get in at 230 and your final cover is down here at $1.32. You made almost $1 on every single share. Even if you only go in with 100 shares, you made almost $100. In an hour, $100 an hour. I mean, that's pretty damn good money. I need to figure out why this screws up like that. Then utilizing indicators for trading decisions. Like I said, moving averages. That's just for targets. That's all I care about. Like for me, too many people make trading way too complicated. Oh, hey, you have to have this EMA crossing this, lining up with this, and doing this, and like, no, dude. Like, for me, really the biggest thing that I focus on is ceilings and floors, because that's where the big money is going to be at, and they're the ones that make the stock market move anyways. So if you want to make money, the smartest thing to do is to find out where these guys are getting positions, where are they selling, where are they buying, and depending on what side of the trade you prefer to be on, make sure you're on the same side as them. Another thing that's a huge thing is daily levels. There's key support or resistance points, and it happens over and over and over. What happened in the past is probably going to happen again. And so if you have a place that is, shows that, okay, hey, this thing's rejected $2.43 4 times in the past. Okay, well, it's trading at $2. For me, I'm looking to get as close to 243 as possible, because for me, that reduces my risk. You can make a lot of money in the stock market. It's not about how much money you can make. It's about reducing your risk and making sure that, I don't know, you can keep your money. And that's one of the biggest things I've noticed in traders is they want to make so much money super quick, and they go balls to the wall, and it's like a 50-50. Some of them make a lot of money, but the ones that make a lot of money, they start sizing up way too fast, and then they lose all of their money really quickly. Or the other side of things is people can't find discipline, can't find structured rules, and they never make money, and then they just give up because they run out of money before they actually make it. And for me, I truly believe that everybody in the world can trade stocks. It's all about A, preserving your capital, B, having a structured plan of how to trade, and then find a mentor that can help you, that is somebody that, I don't know, is aligned with your personality. And then the biggest thing for me is volume. Volume is a critical thing. If I see a lot of volume coming in, but it's towards the lows, that's telling me, hey, dude, somebody's propping this thing up. And I don't like that. I want this thing to fade. I want to have all the volume trapped at the top, because that's going to fuel my trade. It's the same thing. I want to short where people are getting greedy, think that it's going to go through, to the moon. Cool. I want to get in there. When you're being greedy, I want to sell, because I want to make money, because you're greedy and you don't know how to control your emotions. At the same time, I want to be buying back and getting out of my position when, people have a lot of fear. It makes it keep on going farther down, and then I use the moving averages so that I can control my greed. Because if I don't have a systematic approach to things, they'll be like, oh, I'll just hold this a little bit longer. This is going to fade all the way down to zero, and that's what used to happen to me all the time. Is I'd be up a lot of money, and then because I was too greedy, I would lose the money and start fighting the stock. And so for me, I was like, well, how do I fix that? And then I just started making a systematic way of taking profits, and I made rules that work with my own flaws. And so that's really what you have to end up doing. Identifying and confirming trends. Like I said, the moving averages, start tracking things. When a stock starts to fall down, is there, a place or a zone that it keeps on, finding a floor at? And, does it have a time frame that it generally starts doing that? If, say, like here, is it holding above my first target by 11 o'clock? For me, that's, another little gold nugget that I'll give away from you guys is, if my first target has not been hit by 11 o'clock, for me, that's a huge red flag. And so I'm like, this thing might play a lot of games, and, either size down or just leave it alone until there. I want to have something that is like, oh, that just trapped a lot of people, because the more people that are trapped at a certain price, like I said, the more it's going to fuel my trade to make money. And once you start understanding the game of of trading. That's literally what it is. It's just a game, but people turn it into something that it's not. They're like, oh, I hate my job. I'm in an ungodly amount of debt, or they're trying to fix their life with trading. That is a wrong thing to do. It takes a lot of time. Like, for I'm gonna go off the rails for just like 5 minutes, but I just took my son golfing for the first time ever. He's never golfed before, and he's getting super frustrated because we're at the driving range. He has no idea how to hit the ball, and it's going this way and that way. Sometimes he hits the top, sometimes he misses completely. Doesn't hit the ball, and I'm like, dude, it's just like when I took you kickboxing, right? You have to start off in the very, very basic thing. You can't just jump into fighting. You have to, start at the basics. You have to understand, your stance, how to hold your hands, how to do all this kind of stuff, and then you can advance into the next thing. Trading is the same way. I feel like you need to learn how to identify certain patterns, the volume and all that kind of stuff, and you can do that for free. For free. You should never be throwing any money out there at the very beginning at all. And then, start getting into, simulated trading and doing that for a while. And then, dip a toe in live trading. But, I kind of went off the rails there for a second. I don't know what sparked that. But, like, you need to start doing the job of trading, because that's what it is. You're building a business, and so for me, you have to start learning that A, this is a business, and B, it's a game. It's like kickboxing. It's like golf. It's like whatever you're into, and you have to give yourself time to do it. But the biggest thing is risk. Really, that's the thing that absolutely destroys traders. Is because they just throw risk out the window. They need to have stop losses. I've been trading for like 6 years now, so I don't have a stop loss. For me, I know exactly where. Well, I guess I do have a stop loss, but I have it manually. I know I have trust in myself, and I have in my head I'm like, hey, this is where my system says to get out. I get out. As a beginner trader, what you should be doing is having a hotkey where, okay, the second you get into the trade, okay, well, what's your risk? Are you risking 10 cents, 20 cents, 30 cents? What is it? And then have a hotkey, that you just click, and all of a sudden, boom, it sets your key. If it hits that level, you're out of the trade. You lost the trade. Okay, no problem. The other thing is position size. I never did any of this stuff when I was a very beginner. I would go balls in on everything, and I would either win a lot or I'd lose my max loss. That's not trading. That's just gambling. You need to learn how to position size things, and how much capital are you willing to risk on the trade? Are you risking $50, $100, $20? Whatever it is, and then size in accordingly to your how much money you're willing to risk. And then being okay with the outcome. This is the only job that I know of where you can show up to work, do everything perfectly correct, and still lose money. So you need to make sure that you're okay with that. And how I figure that out is I have a system. Every single trade is exactly the same way. Okay, hey dude, if I get in on a gap and crap, I know what my entry is. I know what my risk is. I know what my targets are. Okay, cool. I get in the trade. It either works or it doesn't work. That's it. Then I have my next trade, and then that I know exactly where I get in, where I risk, where my targets are, everything. It is down to the T. Then if that doesn't work, I have one more opportunity. I have one more play that I'm allowed to trade. But I have to have certain things that it does for me to even have an entry. It doesn't just mean that I just trade, wherever the hell I want. It has to do a certain thing and give me my entry. And then once it gives me my entry, I know exactly where my risk is, and once again, where my targets are. That is So that is the biggest thing, is trading the process and not the P&L. That is the biggest thing in trading, 100%. And then avoiding the guru trader trap. This could potentially be the biggest thing, really, is many people fall into the trap of following self-proclaimed experts, also known as guru traders. Guru traders often promise unrealistic returns, like, for instance, hey, how to invest $100 and you're gonna make $1,000,000. Dude, I'm telling you right now, that ain't gonna happen. There's no way in hell that is gonna happen at all. You can. I do know one guy that, I know this is gonna sound really crazy, but he did actually turn $2,000 into $1,000,000, but that's like, one in a million. Like and he had like 5 or 6 years worth of trading experience, which made him capitalize on COVID. And COVID really made a lot of people an ungodly amount of money because they knew they had enough knowledge to capitalize on the opportunities. But they promise, these promises can be enticing, especially for those that are new to the market who are eager to make quick profits. Like I said, the guys that are like, oh, dude, I hate my 9 to 5 job. I can't wait to trade full time. I have an ungodly amount of debt. I need to change, my circumstances in life. Dude, if you hate your 9 to 5 job, quit it. Go find a new 9 to 5 job. You're in an ungodly amount of debt. Make a game plan that does not involve trading stocks. Start chipping away that debt. Go watch Dave Ramsey or whoever you're into. But like, don't be coming to the stock market expecting things, because if you come to the stock market expecting things, it changes it, and you're just going to lose money. You're going to put too much pressure on yourself, and it's going to absolutely destroy you. It's important to be skeptical and conduct your own research. Focus on developing your own trading strategy and risk management skills. Avoid relying on others for trading advice, which is why, I'm not trying to do like a huge pitch. That's why I did things, my way, because most of these rooms I've been a part of, people will trade live, and that's good. It shows you that they're actually trading, and you can hear feedback, and it makes it real. But if you don't have any idea and you're just like, you're waiting for the guy to say like, okay, I'm short risking this, all you're doing is you're following alerts. You're not learning how to actually trade, and that is, I don't like that. And so for me, that's why I have courses. Hey, if you're a brand new beginner, go ahead and join my room and watch the courses, learn how to actually trade stocks. And remember that the trading world is full of individuals with different backgrounds, motivations, and levels of expertise. It's the only thing that I know of that you can dive into, and on the first day you're trading against me or my mentors or guys that are 10 times the trader that I am. And it's very, very important to remember, hey, dude, there's a huge learning curve to this, and that's why so few people make it. I feel like they do the wrong things. They dive in 100% too quick, and they run out of capital, honestly. It's essential to approach any advice with a critical eye and validate information from multiple sources. Instead of blindly following gurus, focus on building a solid understanding of the market, learn about fundamentals and technical analysis. Risk management is, I can't stress that enough. Risk management is the most important thing ever. And the different types of financial instruments, and what clicks with your personality. Do you trade with like me? All I need is chart patterns and volume. That's it. I use Fibonacci once in a while, but I know people that use all sorts of stuff. And what instruments give you an edge, and take the time to really learn what that edge is. Don't just dive in and think that you found the Holy Grail, because I'm telling you right now, there's no such thing as the Holy Grail. You are your own Holy Grail, and I don't give a shit what anybody says. This will empower you to make informed trading decisions based on your own research and analysis. while seeking guidance from experienced traders can be helpful, remember that ultimately, you are responsible for your own financial decisions. And I really, you know, I tell people that I truly believe that I can take you from not knowing anything to getting to $5,000 a month. But at the end of the day, you have to do certain things. You can't just, dive into my courses and then you're instantly going to become some amazing trading rock star. It's not gonna work at all. And so I wanted to make this for beginners. I have a 10-part course that I'm going to start doing that I'm just going to throw out there for free. I'm not trying to sell anybody anything. I'm not trying to do whatever. Hopefully you guys learn something from this. If you guys are actually interested, like I said, there's a lot of material out there, and there's a lot of books that you can read that you can get a lot of valuable information from. And at the end of the day, really, I really truly believe that the stock market is one of the ways for you to build, generational wealth. And that's exactly what I'm doing. But the problem is people need to have a planned structure of how to do this. And it's a lot, man. You can't just dive in and expect in your first month that you're going to make thousands of dollars. You're not. And if you're using enough money to where you do make thousands of dollars, you're going to lose thousands of dollars that quick. So for me, really, like, step one, okay, you're interested, cool. Watch the stock market. If you're into small caps, cool. Watch small caps. You're into futures, big caps, whatever. Get educated. Read books. Watch YouTube videos like this. Hopefully you guys, I really truly hope that you guys found valuable information from this, and that maybe this adds to your guys' journey. But I really believe that people need to have realistic expectations, because when you have all these guys flashing around, driving in Lamborghinis and having mansions and flying around on private jets, and it's like, that is absolutely a possibility. But for me, it's like, is that what the majority of people are going to do? No. And I feel like that's why a lot of people don't succeed. They try to get to that within a year or 2 years. Like I said, they have very unrealistic expectations. And if you can rewire your brain to look at things like, how much money do you actually need to make where you can find financial freedom? I would imagine it's a lot less than making. Yeah, of course, if you make $1,000 a day, yes, of course that will speed up the process. But I would imagine if you can average, $200. If you can average $100 a day trading in the stock market, I mean that's going to compound, right? You need to have small goals and start chipping away and having the patience to do the work and build generational wealth, really, because that's the biggest thing. I feel like people get plugged into the greed, and they have this fear of being stuck where they are, and they hate their life. Dude, go and change your life. Find life balance, and then use trading to, I don't know, add jet fuel to that stuff. Because really, man, you start learning how to trade, you start learning this skill, this can change your entire life. But there's a lot that goes into it. And like I said, I'm going to be putting out 10 of these webinars. So if you guys do like this, please like and share. Subscribe to the channel. It's going to help me out. And like I said, write in the comments below, like, what would you guys like, or what about this did you not understand? Do you have any more questions? And that way I can truly help, because I really do believe that if you put good energy out there, good energy comes back to you. And that's why I want to put this stuff out there for free, because I don't know, maybe you don't have money for subscriptions or for mentoring or whatever. Does that mean that you should not be able to have a good life? No, that doesn't at all. That means that, okay, you need a little bit of help. And as long as you put in the work, I believe that you deserve that help. And so, I don't know, that's my belief system, and so that's what I'm doing. So hopefully you guys found value in this, and I will see you guys in the next one.